In this video, I want to review the portfolio of Mohnish Pabrai as of Q4 2024. So we will see the latest moves from Mohnish Pabrai. We will see the website Dataroma where there are the US holdings, and then we'll go through this page with the real holdings. Just so you know, in case you want to analyze the portfolio of Mohnish Pabrai, if you go to Dataroma, you will only see the US listed holdings, so American investments. But most of the portfolio is not in the US. Most of the portfolio is international, so you have to go to other websites. In this video, we will analyze the latest trends, the latest buys, the latest sales, so that you leave this video with some value. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, thanks to copying Mohnish Pabrai, Warren Buffett, Charlie Munger. So these super investors are of great value. This is why we do this kind of videos, this kind of analysis. Okay, now if you look at the portfolio on Dataroma, you see only 3 holdings. That's not a lot. And this is a pure play for coal mines in the US. In case you don't know these 3 companies, just so you know, in summer 2023, Mohnish Pabrai started to buy coal businesses, coal stocks. And if you look at the stock price for all these coal companies, you see that they had a very, very good 2023 because it was a part of the cycle. And then he bought around here, right? And then it was a double and it crashed back to the same level. So now he is at break even for these companies. And in case you don't know the financials of these companies, let me show you some charts so you will understand why he owns these 3 businesses. Basically, 1/3 of the portfolio is in AMR. He added a little bit, but not a lot of change. It's been the case for many months. It seems like Alpha Metallurgical Coal is Mohnish Pabrai's favorite coal bet, favorite coal investment. You have Warrior Met, where he doubled the position, so that's 1/3 of his portfolio. And you have Core Natural Resources, when he reduced 20%. It's a merger between 2 companies, including one of the biggest holding like he had called Consol Energy. So just so you know, a coal company, merger of 2 coal companies. So pure play here. Let me just show you the financials of these businesses so you will get a clearer view. These companies are quite small actually. If you compare this to most American businesses, Alpha Metallurgical Coal is a market cap of $2 billion. Okay, this is a company very cheap, PE ratio of 5, and it's very cheap because it's cyclical, right? It depends on the price of coal. They sell met coal to the US, so domestic sales, but also international. Met coal, metallurgical coal, is used to produce steel. So if you need a lot of steel in the world to build bridges, to build all the infrastructure, you need met coal, and this is where AMR makes a lot of money. If you look at the latest quarters, you see that the net income has crashed significantly, but still the company doesn't have any debt, so we are in a safe zone here. I know this because I am a shareholder of AMR, so obviously I'm biased, and I think this is one of the best companies in the coal industry because of the balance sheet and the clear capital allocation. You see that the revenue is not growing that much. The net income is cyclical, and they made a lot of money in 2022, 2023. I mean, you can check the price of met coal. Maybe not exactly met coal, but you get the idea. This is the chart of the commodity, right? And you see that in 2021, 2022, with high inflation, the price of coal worldwide, internationally, this price has increased massively. And the way these coal companies work is they work with fixed contracts in advance. So you have committed volume, committed price. So you know in advance the free cash flow you will produce for this company. So when the commodity price was high, all these coal companies locked the profits, locked the free cash flow, and this is why you have a certain lag. You see, the peak of the commodity is in 2022. Is this website in French or in English so you understand better? Yeah, okay. The peak of the commodity price was in 2022, and the stock price followed a little bit after. We were in 2022, and the stock price doubled in 2023. So you have a small lag between the commodity price and the stock price. And what did AMR do with the cash? They paid all their debt. That's very good. And they used the remaining cash to do buybacks. And they are clear about it. Alpha Metallurgical Management is clear about this. They want to use all the cash to do buybacks in the future. They think the stock is extremely undervalued. And in 2022, they bought back 15% of their shares, as you can see here. In 2023, they bought back 17% of their shares. And now we are at the low part of the cycle. Look at the commodity price. It's low again. And I can show you other indicators, but this is not the goal of this video. You are in the downtrend for this cycle. So seems like the profits will continue to decline, and when it rebounds, all the cash will be used to do buybacks. So Mohnish Pabrai, he has said it publicly in different interviews. AMR is one of the lowest cost producer of the industry. So when the cycle is low, they can survive, especially if they don't have any debt, they can survive. And when the cycle picks up again, when the commodity prices go up again, they will make a lot of money. And all the money, all the cash flows will be used to do buybacks. So it's an appealing risk-reward perspective here. So that was for AMR. That's his first investment, favorite coal investment. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The second one is Warrior Met Coal, and he boosted the position in the latest quarter. So that's at the end of 2024. We don't know the latest months, like January, February, but as of the end of 2024, this is the position. Similar scenario. You have a company of 2 billion of market cap. You have a PE ratio that is a little bit more expensive. They still produce some massive free cash flow, and as all the commodity coal names, the net income has been declining, obviously. So similarly, they don't have a debt problem, and they don't do as much buybacks as AMR. Okay, same thing, low cost producer. They can survive, and if the cycle goes up again, they will make a lot of money, and people will say it's so easy. So when the tide will turn, people will say in hindsight that it was so easy to find these bets. And the last one that he reduced is CNR, or maybe because it's a merger, I will not find it. Oh yes, I found it. So it's a merger of two companies in the coal industry, and the market cap is $4 billion. I believe this is the stock price of maybe Consol Energy at the time. Ticker symbol is CX. CX. It was named Consol Energy at the time, and they kept this stock price very well. And the thesis for this one is very simple. PE ratio of 5. They are still generating some profits. They use all the cash to pay off the debt, similarly to AMR, what we've seen before. They pay off the debt, and they start to do dividends. In 2023, they bought back 14% of their shares. So same thing, it's a cyclical play. They, in an interview, a lot of buybacks, some cash, and now they have more cash than debt. So all the cash will be used to do buybacks, I think. In a recent interview from, 4 months ago, Mohnish Pabrai explained the merger, and they say, basically we have a company that can produce a run rate of $1 billion of free cash flow every year on an annual basis. That's a price to free cash flow of 4. And yes, you will have cyclicality. Yes, you will have ups and downs when it comes to the free cash flow generation. But in the long term, like if you take a 5-year view, 10-year view with the cycles every year, averaging out, you will have $1 billion of free cash flow per year. So price to free cash flow of 4. And we will see if this happens. If I look at the trailing 12 months for this company, what do we have? Free cash flow of 700 million, 400 million. Yeah, even if you cut in half the projection and you only produce $500 million, so $500 million, that's a price to free cash flow of 8. That's fine. in 8 years they can be they can buy back all their shares. I mean, that's good. I like the industry here, and that may be a big winner for 2025. You never know when the cycle will turn, right? You never know when the commodity price will go up again, but it's all cyclical. And when the tide turns, it will turn fast. Also on Dataroma, you see only 3 lines here, but if you click on activity, you see that he sold some position. So he sold 100% of Arch Resources because it's part of the merger with Console Energy. So this is not a selling, it's just a merger of 2 companies. And he completely sold out of Danaos. Danaos is a shipping company. I believe he built a small position in Danaos in the latest quarter, and apparently he changed his mind. So Danaos is no longer an investment from Mohnish Pabrai. Okay, so we covered the US holdings of Mohnish Pabrai. If you go to their website for this fund, Pabrai Wagons Fund, I mean, it's free. You can check, you can type this on the internet. You have here investor presentation, and if you click on investor presentation, you have the latest slides from February 2025. So you have them. That's the most recent data. They talk about the strategy, what they plan to do. They say that they will be opportunistic with a concentrated portfolio. They say that the PE ratio for the S&P 500 is high, and if the valuation for the S&P 500 is high, maybe it's not good to invest in the S&P 500 because the valuation, you will have a reversion to the mean. That's the goal of the fund. Instead of focusing on the US tech stocks, they focus on cheap names that are hated at the moment, either coal mines but also other names. That means that the PE ratio for the fund is 7 instead of an expensive S&P 500. And if you scroll down a little bit, here is the portfolio as of December 31, 2024. You have Turkish holding here, that's 15% of his portfolio. Another Turkish holding, a financial service. You have 2 bets on coal. You see, first mistake maybe you may do. Here on Dataroma, you see that Alpha Metallurgical Coal is 38% of his portfolio. That is not true. That's 38% of his US holdings. So, okay, here we go. I have this again. So that's 7% of his portfolio. Warrior Met Coal, 7% of his portfolio. What is strange, and maybe you will have an answer for this one, is that he invests in other US holdings like Occidental Petroleum. It's an oil and gas play that Warren Buffett is also buying. Toll Brothers, home builders in the US. Pult Group, home builder in the US, 4% of the portfolio. Asbury Automotive, small car dealership, very cheap. Group 1 Automotive, AutoNation, small car dealerships. These are US holdings, so I don't really understand why it's not appearing here. Maybe I'm missing something. Maybe you know, and the comment section is here for that if you want to exchange on this, but that's quite strange. But it's been the case for a few months now, so I'm guessing there is a bug on Dataroma or something. For his top 10 holdings, you see Turkey, that's his best conviction. Coal names. You have an oil and gas play here for Occidental Petroleum, and you have home builders in the US and small car dealerships. And if you scroll down, they explain this. The Pabrai Wagons Fund is circling the wagons around 6 key buckets that make up approximately 70% of the portfolio. You have Turkey. You have India. Oh, sorry, that's an Indian holding here. Oh, I thought it was Turkey. Let me check. Oh no, that's an Indian one. Okay. I don't know this company. You have selected coal businesses global. So what you see on Dataroma, the 3 coal holdings represent 15% of his portfolio on average. You have car dealerships. You can check ABG, you can check AutoNation, you can check Group 1 Automotive. There are other small car dealerships. If you want cheap names, cheap stocks, that could be it. You have Lithia Motors, ticker symbol is LAD. That's also another competitor, equally good. You have a Penske Group, Very good. So a couple of names. You have selected USA Builder just for the update. A few months ago, he did an interview. Mohnish Pabrai made an interview, and he explained the reasoning behind investing in home builders in the US, saying that you have a gap between the supply and demand of home in the US. So he expects a lot more home buildings in the US. Like you need a lot of demand to match the you need a lot of supply to match the demand, basically. And this gap will be filled eventually. So these small home builders will make a lot of money, will build much more homes in the future. And he selects the home builders with the best balance sheet, the best margins. You have NVR, Pult Homes, Toll Brothers. These are great investments. So definitely something to check if you want to go deeper in the analysis. And you have Reysas in Turkey. Reysas has been an investment of Mohnish Pabrai for a few years now. It's a clear winner. If you look at the stock price, you will love it. Yes, that's basically the stock price. I'm aware that you have some currency conversion with the Turkish lira, so the performance is a little bit boosted, but still, even if you take into account the depreciation of the lira currency, the Turkish currency, that is an amazingly good performance. So that's here. And what do we have here? The bull case for some stocks, TAV Airports, TAV Airports. You have Edelweiss Financial. I've shown you how to find this presentation in case you want to go deeper on this one. Basically, what I told you for coal names, this is what the thesis is: highly cash generative, debt free, and returning cash to shareholders via buybacks at low multiples, like PE ratio of 5. So okay, and because they are low cost producers, they can survive. If we have a downtrend in the cycle for many months, they can survive. Small car dealership, they are cheap, and the market concerns are overblown. For Asbury Autonation, Lithia Motors, Group 1 Automotive, yeah, here we go. You can do the due diligence on this one. Autonation is famous for doing a lot of buybacks, and you have a lot of fears in this industry because the world is going with electric cars. You don't need auto parts when you have an electric car, because for EVs, electric vehicles, you have half as many parts in the vehicle, so maybe the revenue of these companies will be cut in half. Yeah, it will take some years, if not decades, to have EVs entering the US market and having the majority of the market share. So they are doing buybacks at a low multiple. Same thing for home builders. I've shown you have a deficit in homes in the US, and they are trading cheaply. You have a PE ratio of 10 or lower than 10 in here. You have Reysas. Well, maybe you are familiar with Reysas. He made a lot of interviews about Reysas. And that's basically it. That's basically it for the latest updates. So here is the portfolio. You have it. The thesis is still intact. Coal, Turkey, India, a small oil and gas play with Oxy, small car dealerships, and home builders. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.